Welcome to the show today. I'm really glad everybody could join us. So today we're going to be diving into 15 easy ways to get business credit, loans, credit lines for real estate investing. We've even got grants here that we're going to be diving into, so a lot to cover. Let me introduce myself. My name is Ty Crandall. I'm actually the CEO here at CreditSuite, and what we do at CreditSuite is actually help people obtain all different kinds of loans, credit lines, and business credit. So what I'm teaching about here is something I know really well because we fund a lot of loans and have helped a lot of people build business credit using a lot of the products that I'm going to introduce you today. And the reason I wanted to do this today is because real estate investing is one of the main industries that we help, and it's an industry that we've got really good at helping, but because they struggle so much on the in the outside world, a lot of lenders, a lot of conventional banks just don't really favor real estate industry. So there's a lot of options that we find that people can qualify for that most people just don't even know about, which is what brings us to the reason that we're doing this today. So I want to dive into a lot of these. Two disclaimers before we dive in. First of all, I have a lot more than 15. I know I could count, but I just couldn't stop. There were so many grants and things we even added at the end that it's going to be well over 15. And secondly, because we've added so many sources, I know we're going to go over an hour. I typically try to keep these at an hour, but I've got about 9 slides beyond what an hour will usually look like. So I know we're going to go over, but I assure you that by the time you leave here, you're going to have some good options. We're going to talk about options regardless of personal credit, whether you're a startup, all the barriers that have probably prevented you from getting money before, we're going to be diving into. So without further ado, I do want to also say at the bottom left, we have, you'll see I have a link on the bottom of some of these slides, creditsuite.com/get funding. If you ever want to talk to our team about all the loans you can qualify for now, feel free to use that link. We never charge you a dime of money to help you with getting loans. We don't charge you upfront application fees. We don't charge you funding fees in the end. Some lenders pay us referral fees, some don't, but that's how we get paid if we get paid. So we'll help you through the entire process of finding what loans you may qualify for and helping you through all the way to funding without it ever costing you any money. Actually saves you money because we negotiate and do all that for you. So real estate is investment. Well, look, it's nothing new, right? I mean, real estate investing has been around for a long time. It predates the stock market and other methods of trading and valuing wealth. And land used to be the best sign of anyone's wealth. Why? Because land is permanent. And this is why so many people believe in real estate investing, even above and beyond the stock market, because it's real. Land is permanent. There's a limited number of land that's available. So while renting out real estate investments remains a really popular way for a lot of people to make money, a lot of people are really making money nowadays in what are called fix and flips and fixing up and repairing rehab properties, which we're going to talk about a lot of funding options there. So according to the Real Net Wealth Network, 2016 was a banner year for flipping in the United States. About 6.6% of all single-family condo and home sales were flips, almost 7%. That's pretty crazy. So we've definitely had a strong recovery after everything changed in the economy. And I want to kind of go through a little of this before we dive into specific products, just to let you know that, hey, look, if this is what you're looking to do, you're in the right place. The statistics are definitely on your side. So turning to business credit to get money to flip is a really smart choice to get started. And you might be tempted to even try traditional lenders or credit providers like banks or credit unions. And this is one of the biggest mistakes that we see people make, is they actually come in and they start with banks or credit unions, but unfortunately these typically aren't the best places to go to get financing. You know, credit unions and commercial lenders, they all really are not the likely sources to give you loans. If you have great personal credit, great business credit, you've been in business a long time, if you have you know, a lot of revenue and profits you can show on your financials, and you have collateral and all these other things, then you might have a shot. But even then, you're still considered high risk when it comes to real estate investing, which is why you might want to not consider, you know, going to a conventional bank to get money. So look, I love the SBA. I'm a big fan of what they do to help small businesses obtain money. But usually, you know, they've got very strict guidelines to get approved, and SBA guarantees the actual loan. The bank issues the loan. So what happens are, you know, these loans rates are more favorable if you can get them, but real estate investing is typically too high risk for SBA and the conventional banks that actually lend with SBA guaranteed loans. So the reason I tell you this is because when I talk about where to go to get money, I think it's important to address the elephant in the room of where you probably might have thought you should go to get money. And when I stand in front of large groups, and we do a lot of speaking at real estate and at real estate conferences and with Renatus and things like that to help with training, this is one of the things that people commonly say is they think they're going to go to their bank to get money when their bank is just not the absolute best source. So if you had to wait around until your bank or credit union was going to be comfortable enough to give you a loan, you're going to be waiting a long time and miss a lot of the opportunities that are out there. And that's where these other options come into play, because according to I think it's Department of Labor actually that reported on this, about 98% of actual financing is now coming from alternative lenders. It's not actually coming from the big banks. Actually, that's Department of Revenue. I just checked my source. So it's coming from these alternative lenders that we're going to talk about today. It's not coming from the big banks. So if for some reason you think, man, I want to invest in real estate, but I can't get the money because I know a bank won't lend it to me, you're probably right. The great news is banks aren't the best sources for money anyways. It's these other options we're going to talk about. It's these alternative lending sources that have the other solutions for you. So banks and credit unions might not be able to help you, but there's a lot of lenders out there that can actually help you, because as I just mentioned, per the Department of Revenue, most loans aren't coming from the big banks anyways. So here's a lot of options that can actually work with you. And again, the reason I'm qualified to kind of have this conversation with you today is because we literally work with hundreds of investors and lenders, soon to be thousands. I was actually just looking at our master lender list that we're rapidly expanding, and we work with all legitimate type of funding programs that are out there. There's a lot of stuff we test that doesn't work and it's not really legit, and we rule it out, and then we test a lot of stuff that works really well, and even though it might help 1 or 5 people in a year, it's still a really viable funding product if you can actually qualify, which in a lot of cases you can. So let's talk about these options, starting with my personal favorite, which is unsecured. So with unsecured financing, you basically can get up to 150 grand with 0% rates that you could get even as a startup. When we talk about real estate investors, this is the #1 go-to program that we see them really gravitate towards. So with this, you're getting credit lines, and basically you don't need any collateral or you don't need any assets for approval. All that you do need is good personal credit. You need about a 680 credit score. Now, you might be watching this and think, okay, I already know about this program. I've already heard you talk about it. That's great. There's going to be a lot of programs and grants at the end you've never heard me speak about, because I never have. And second of all, don't worry if you don't have the credit to qualify or don't have what I'm saying you may need for a program. We're going to talk about all kinds of programs where you are able to actually get approved. And also with this program, you don't necessarily need a 680 FICO or higher. You can get approved even with a guarantor. So let's say you have a family member, a friend, a business partner, somebody that says, oh, you're investing in real estate? Well, I want to be part of that, and here's my strength, and here's what I could bring to the table, and their strength is they have good credit. Well, now you have a way for them to tap into that credit to actually get money to actually flip, while maybe you're doing another part. Or maybe you go to somebody and use their credit to get the money to flip the house, and you give them a percentage of your actual profits. So even if your score isn't 680, first of all, work with a reputable credit repair company to get it there, which isn't us, by the way. We don't do that kind of service. I'm just telling you because it really makes sense to do it. And secondly, consider a guarantor. You might have someone around you that very well might be interested in getting a return on what you're doing, and they actually don't want to do the work. We see these in real estate groups in the local area all the time, where there are people in there that are willing to invest and get a return on the actual investment, but they just don't want to be part of the actual process. So a 0% program, this is 0% for 6 to 18 months, and it works really good for real estate investing because they don't care about in what industry you're in. So you can also get it even as a startup business. So even if you're just starting a real estate investing business, you're still able to get approved. Now you can get credit lines to take the cash out of. So That's the benefit of credit lines versus credit cards, right? Credit cards only allow you to take out a certain percentage of money, or you pay these astronomical 20% rates to take cash out. What's nice about this program is that you can physically take cash out of this. You could physically take cash out of these lines at 0%. So it gives you the benefit of 0%, and it also gives you the benefit of actually physically getting credit lines that you can reuse over and over. So you get 0% financing, and you also get the ability to take cash out. It's kind of like a hybrid of credit lines and credit cards. Credit cards give you a benefit of 0% for 6 to 18 months. Credit lines give you the benefit of cash out. This program really is a hybrid of both of those. You can get approved as a startup. You don't need collateral, and you can even get approved again as a guarantor. So a really good program to consider, really good for real estate investing. So another is revenue lending and cash advances. Now this isn't a loan. Basically what it is they're giving you money in advance on your future revenues. You're basically selling your future revenues. Now what I like about this program is you can get approved and fund in about 72 hours. The other program I just showed you with unsecured takes about 2 weeks to maybe 3 weeks to get your funding. So not a really back is against the wall type of option you want to get into. This is faster funding than that, but if your back's not against the wall, it's a really good option to consider. This one's just a faster, easier way to get money. Again, if you actually do have what's needed to qualify. So with cash flow financing, it's really one of the most popular types of money to get today. It's fast and easy money. All that's needed for approval is a 6-month bank statement review, okay? And you can typically get approved for about 10 to 12% of your annual revenue. So the first option I told you works really good if you have personal credit that's good, or a guarantor that does, even as a startup. This one, you've got to have some revenue. You've got to be in business for about a year to get approved, but your credit can be really bad. They don't care about personal credit. All they care about is revenue, and you can typically get about 10 to 12% of your revenue, and there's no collateral requirements. And some sources will go as low as a 500, but a lot of sources don't have any consumer credit score requirements at all. So the last option we talked about needs good credit. This option doesn't care about credit pretty much at all. All they care about is that you have consistent revenue. So you need to be in business about a year, and you should have over $10,000 a month in revenue. If you don't meet one of these, there's a possibility you could still get approved because you have some other kind of compensating factors. So you'll need to have consistent deposits, about 6 to 10 a month, and you should have money left over in your bank account at the end of each month, a positive ending bank balance, which makes a lot of sense because these lenders deduct money directly from your bank account as payment. Some do it daily, some do it weekly, some do it monthly, but if they lit your bank statements and you're overdrawing your account and you have a negative ending bank balance at the end of each month, well then from their perspective it doesn't make sense to give you a loan because you don't even have enough money to pay what you already owe, let alone getting another loan. So this is what they're basically looking at, is bank account management. Now once you pay about half the amount back, you're going to get offered another loan. Terms will get longer and rates will get better. So if you've never done one of these before, terms usually range from 3 to 18 months, but we see them go as long as 3 years. So there's this perception with these programs that these are really high risk and really expensive money. In all fairness, it is one of the more expensive funding programs that I've seen out there. But at the same time, we've seen people get 8% interest rates on this program, which is pretty comparable to, private money loans, and also get up to 3-year loan terms, which is very comparable to other term loans. So it depends on your risk. If you come in with really bad credit, shorter time in business, and poor bank account management, the great news is you can still probably get approved, but you're going to pay a much higher rate. If you come in with better credit, better time in business, better bank account management, well then you're going to get better terms, even terms that are comparable to a lot of loans. So terms will get longer though once you've proven yourself the first time around. Even if you're high risk, you can still get approved in a lot of cases with this. High risk, I mean short term in business and bad credit. But what will happen is they'll usually give you a shorter term, 3 to 6 months, and a higher interest rate, could be 25, 30% or higher. Then once you've paid half that amount down, they'll come back to you and offer you more money at a better interest rate and a longer term. So what happens is the second time they give you an advance, your payments usually will not increase a lot, and you'll be able to get a lot more money. And usually it comes in 24 hours with only one bank account or bank statement review. So from what we see, over 70% of our clients come back and get this, which is kind of funny because it's perceived as such a high interest rate program, but this one has more people renew and come back and get more money than any funding program I've ever seen, because it's just simple. You know, you get one bank statement and they wire the money to your account the next day once you actually have gotten approved that first time and proven yourself. It's kind of expensive to get in the beginning. The rates are higher, the term is shorter, but once you've proven yourself, then the subsequent fundings that you get are real easy to get, and the terms get significantly better. So another one is merchant cash advances. Now, similar to cash flow financing that we just talked about, but all they're looking at here is credit card deposits. They're not looking at actual revenue to being deposited. But qualifications are a little bit easier also. You know, you can get approved in a lot of cases with only $5,000 in deposits and only 6 months in business versus what you're actually going to find with revenue lending. Outside of that, everything is like I just told you. Funding within 72 hours, only looks at your bank statements for actual approval. So a really easy program to get approved for if you have good bank account management. And with this one, if you have really good credit card deposits. So securities-based credit line. Well, this really has to do with if you have stocks and bonds. And if so, you use those as collateral to actually get a business credit line. You know, rates are usually 5% or less, and there's no cash flow or credit requirements. So we talked about a great option if you have good credit and a great option if you have revenue. With this one, you don't need any of those. All you need is stocks or bonds or a potential investor that does. And I really stress the potential investor that does, because if you're getting into real estate flipping, you can make a lot of money quickly. And the truth is, if you're watching this, it's probably because you need the money to flip. But there's other people out there that have plenty of money, that have stocks and bonds, that have good credit, that have the things you might not, that want to get the return that you're going to get on the investment, but they don't want to do the physical work. So, and a lot of times it just comes down to being creative and putting A and B together. You know, you're the guy that's willing, or the guy or gal that's willing to do the work and find the property and do the rehab and flip the property. Somebody else might not want to do any of that, but actually has the money or has stocks and bonds or has the credit that they're willing to front to get you the money to do the work and then get a percentage of return off the actual investment. And this might not work for you long term, but it definitely can work as you get started, because as we're going to talk about here, there's programs that are just for real estate investors, that are specifically for real estate investors that have experience. So the first time out the gate, maybe you go to grandpa, maybe you go to somebody else that has investments, and they still keep those stocks and bonds, they still earn the interest on them, they just let you use those as collateral to get money. You use the money, you buy the property, you flip the property, you pay them a rate of return. All the while, you're stockpiling your own money to make it easier to get future fundings your own without them. So you don't need bank statements or tax returns for approval. You or that person will still earn interest on the stocks and bonds, and you can use any stocks you currently own as leverage to get financing. So with this, what's nice is, let's say grandpa, let's say perfect. Grandpa says, oh, you're going to flip properties. I'd like to get in on that. And you say, okay, well, I need the money to get started and I don't have it. I'll do the work and I'll give you, 10% return or 20% on what I make. And he says, okay, well, I don't really want to lay out $100,000 in cash. He said, well, do you have stocks? Yeah, I do have stocks. Well, we can get financing using your stocks as collateral. You still keep them invested where they are now. You still earn the interest like you earn now. The only thing is if I ever default and we don't pay this loan back, they'll take the stocks in return. So the risk is minimal to that person or you, unless you don't pay. Then they just basically take the stocks and you've got the property. So a really good way to go, especially if you have others around you that have stocks or bonds, or you do. You can get 90% financing of the value of the stocks, and you continue to earn interest, as I said, and closing usually takes place in about 3 weeks or less with this program. So another one that's similar is called 401k financing, and this is where you're using your 401k or IRA to qualify for financing, and there's no tax penalties. So let's say you or somebody else, I just said that it's a potential investor that wants to go in with you as a partner, has actual 401k. Well, with this, there's no penalty for taking the money out like there is normally in a 401k. So it's based on IRS proven strategies, no tax penalties. You get rates of less than 5% and close and fund in less than 3 weeks and get up to 100% financing of what's in your 401k. So it's interesting because we actually helped a client the other day that he owned a bar. He tried to get $25,000 in money at his bank. He couldn't get it. He was a retired police officer, had $750,000 in his 401k, and was able to get this and borrow as much as $750 against what was in his 401k. He obviously didn't take that much because he didn't need it, but it's an interesting comparison. Here's a guy that couldn't get 25 at his bank. Using this program, he was able to get like 300 times the amount that he was looking for. Okay, so it's really, well more than that. Okay, even well more than 300%. So the bottom line is that this makes a lot of sense if somebody that you're dealing with or you have a 401k, because it's based on IRS tax program strategies. You don't pay any penalties. You can borrow 100% of the value of the 401k that's rollable, which means it's not attached to a current employer, and a really low rate. Like securities, and this is fantastic. They're not based on personal credit. Personal credit doesn't matter. Cash flow doesn't matter. So you don't need a business and you don't need good credit to get approved, and you can still get rates of 5% or less. So your interest stays really, really low while you're getting those initial properties to actually invest in to flip. So there's no consumer credit requirements. Even startups can get approved, and you don't need tax returns or bank statements. There's no revenue verification for this program. And you can get, I already mentioned the 100%. The idea is basically that you're investing into your own business versus another. And that's what 401k is, right? All you're doing is investing into other people's businesses. You're buying stock at other people's businesses. Well, all you're doing here is just investing it into your own business. So a lot of people ask about this program. I even saw an article on Forbes, I think, the other day about it. And, you know, the question, the debate is, does this make sense or not? Well, it just kind of depends to me on how you value your ability to succeed in this endeavor. If you really know you're going to succeed, you just need the money, you're going to get great returns, well, then you're probably going to get better returns than you get on a 401k anyways. But if you really want the stability then of leaving the money in the 401k and earning some kind of return, well, then that might not, this option might not be good for you. So it kind of depends on what your ability and belief in your ability to succeed in what you're doing is. Because if you believe you can succeed in real estate investing, the return on these properties is so high that it's well above what most people are making right now in the stock market. Okay, so there's no tax ramifications, which I mentioned as well. AR financing. So if you have outstanding account receivables now, then there's a great program that you can get approved for. A couple. One I'm going to talk about that doesn't even actually need AR. And basically what happens is they take the account receivables you have and they advance you the money in about 24 hours for 80% of the receivables. So let's say other businesses, the government, owe you $100,000 in receivables and you may wait months to get paid. With this program, you'll get the 80 grand, 80 of the 100 the next day. Then the lender collects on the actual receivables and pays you the 20% minus their fee when it's all paid, when the lender actually pays. So closing only takes 2 weeks or less, and the rates are super low, like 1.33%. But again, to get approved for this, your receivables have to come from the government or another business. Now, this is a great way to go if you actually receive, if you have receivables. If you don't get paid right away, if other people owe you money, because you can get so much money of that advanced to you. So there's no consumer credit requirements, no cash flow requirements, super low rates, one of the lowest rate programs you're going to find. But in a lot of cases, they're going to want you to be in business for 1 year or more. I'm going to expand on this because I don't know for sure if I have on here a brand new program that just rolled out that's absolutely perfect for real estate investors. It might now be my #1 or #2 favorite program. And it's very similar to this. It's very fast. So what they do is they do an automated review of your bank statements and or your accounting software like QuickBooks. And they give you an instant approval and funding in 24 hours for a true credit line, which is a great, great, great program. And then once you borrow the money, they give you 12 to 24 weeks to pay it back. So what I like about this other AR program is the rates are the lowest I've ever seen, 0.5 to 0.7%. So that's 0.5% basically. So for every $1,000 you borrow, it's like $50 a week is what you're actually paying them back. It's ridiculous how cheap it is. And It's a real credit line. You pay it down, you get to reuse it. And if you don't have receivables, but you manage your cash flow well, then this program can also work. So a buddy of mine came in and actually called me yesterday and said, I need a loan. Can you help me with one of these revenue loans? And I said, let's go this way first. And he got approved for the amount that he wanted in a credit line with this at 0.5%, whereas he was asking me for a 25% interest rate program. So needless to say, that's why we're friends, because I said, don't go with that, go with this one. This is a great program if you have account receivables that show up in your accounting software, or you just have pretty good bank account management and over $100,000 in revenue for the year going through your business bank accounts. This program can get you approved up to a $100,000 credit line. So I might touch on that later, but I wanted to throw it in case I left that one out. So you can get 100% financing also, and this is specifically for house flippers. It's called a house reseller program. It's called a house flipper program, a fix and flip. It's called, goes by a bunch of different terms. And with this program, you can get 100% of the money you need to buy in residential real estate and to actually flip real estate financing. And Andre asked, does the program work for a 403B? Yes, you can use a 403B to qualify for a program that's very similar to the 401k financing as well. And if you have any questions, I'll give you our number at the end. I'll give it to you now. It's 877-600-2487. That's 877-600-2487. I'll type it into chat as well. And then again, if you want to talk to us, there's a link at the bottom, a lot of these slides that you can go to as well. So with the house flipper program, you get 100% of the money to buy the property and to rehab or fix the property. Now, they're basically, the 100% is based on an after repair value is really what it is. Okay, so what they're going to basically do is they're going to give you 100% of the money you need to purchase it, or basically 65% of after repair value. So if you buy the property correctly, then you can get all the money you need to fix and flip the property, because you basically bought the property right, and 65% of after repair is less money than what you bought it for minus repairs. If not, so be it. You know, if that doesn't cover all you need, some of these other programs I'm going to talk about may cover the rest, but basically you can get 100% of the money you need to fix and flip residential real estate. Now, this is a 6-month loan term because it's a fix and flip loan program. They don't expect you to keep the loan for more than 6 months, although from what we've found, it's real easy to get them to extend another 2 or 3 months. They'll charge you a fee to do so beyond the 6 months. Also, you can have multiple of these loans out at one time. So if you actually an experienced flipper, you can come in and get access to this money and have 2 or 3 properties that you're getting money for at the exact same time. Rates are 8% or higher, so very reasonable, very similar to alternative financing. But you've got to have an average credit score or higher, 660 or higher. They need flipping experience. So you need to have at least 2 or 3 properties under your belt. And this is what I was mentioning earlier. Maybe you use securities financing, or maybe you use the 401k financing or unsecured financing to buy your first few properties. Maybe you use grandpa's stocks to help you to buy your first few. Then you have experience. Then you start qualifying for actual programs that are designed for flippers. Okay, you'll need to have cash on hand to put into an escrow account. So that's the 3 criteria, 1, 2, 3. Middle credit score, average credit score, 660 or higher. They don't really care as much about that, but obviously they like to see you have some kind of track history of paying back the people you owe. What's more important is B, they want flippers. They want people that know what they're doing. Everybody wants to get into the flipping space. Lenders that specialize in flipping loans want to work with other investors that know what they're, or work with flippers that have experience, so they have confidence to know you could flip this thing in 6 months. And if you are a real estate flipper and you've been doing it and have experience, you have some money in the bank already. They want to see that and put some of it into an escrow account, not for the full amount you're borrowing, but for a fraction of it, just to show that you actually have some kind of skin in the game. But still a really good program, especially for flippers. So you're using the property as collateral. Fund, you're basically getting the house reseller program or the flipper program for the actual purchase of the property and renovations. And again, you know, this isn't something you're going to get at banks or credit unions. And again, as I mentioned, that money that they have you put into escrow just sits there until basically, and is released and draws as your contractors are completing renovations. That's what what it's for. It's also to offset the risk, and it's also the money they put in is also used for this as well. So they're putting money in. They know it's a fix and flip. They're intending for you to buy the property and to fix your actual the contractors. Well, that doesn't do any good if you put all your money into escrow and they don't give you the money until it's all said and done. So the way this is done is they're basically putting the money in escrow and it's released in draws like a construction loan to pay as you actually purchase the property and rehab it. So another great option is to build business credit. If you don't have a good enough FICO score to qualify for some of these programs, well then, don't forget, business credit is a really good and easy way to access the money you need to do fix and flips. As I mentioned earlier, we are the main speaker for Renatus, and if you're not familiar with Renatus, you should look into them. It's an amazing organization, and what they do is provide all kinds of education and training to help people get into real estate investing. And I have a lot of friends in Renatus, and they've made like ridiculous amounts of money on the properties they flip. So we're the main speaker for Renatus, and really rated one of the most popular because this topic of getting money for real estate investing is so popular. And this is one of the reasons why, because we teach flippers to access business credit. And there might be a lot of things you haven't even thought business credit can do, but when you see how diverse and how many tentacles business credit has, you'll see that it also works really, really well if you're investing into real estate. So the first step is getting started with vendor credit. So with vendor credit, basically this is the credit you get to initially build credit on your business credit reports. Okay, so there's all kinds of people that, come in and get office supplies and shipping supplies and building supplies that you could basically use for real estate flipping and also build your business credit at the same time. Now you've got to be careful. I think the reporting agencies say that like 97% of trade vendors don't report. So to build business credit, you've got to get these vendor guys that will give you credit when you have done, and that will also report the credit to the business credit reporting agencies. So vendor credit's really a good way to start building business credit because it's easy to get. Now don't get me wrong, one benefit I didn't mention earlier, on that unsecured program that we started this with, that program actually helps you build business credit too. It can take the place of vendor credit because you can get 5 to 8 accounts that report to the business credit reporting agencies and get that $150 in money at 0%. But what if you don't have good credit? Well, then this is the other alternative. With this option, you don't need good personal credit or a personal guarantee. You could build business credit with no personal credit check using these vendors because they're easy to get. And again, basically you're establishing a relationship with the vendor and supporting that vendor, which is great. But most importantly, you're buying stuff you need to grow your business anyways. They're giving you business credit in return. It's a really good trade-off. And then once you get the first 5 accounts, then you really get the ball rolling and you're able to move into store credit and cash credit, some of these other options we'll talk about. But remember, you could skip vendor credit if you got that unsecured financing program because both of them will actually help you build business credit. You can see I have a link at the bottom, creditsuite.com/EIN. We've got a great free guide to build business credit, and I will tell you, I don't want to tell you how many downloads it has, but it has like tens of thousands of downloads with this guide. So it's really one of the best guides out there you're going to find that just maps out the steps of building business credit. creditsuite.com/EIN. So according to DNB, suppliers reporting to their positive experiences on their credit report are creating what are called trade references, and that's what these vendors do. They report to Dun & Bradstreet, Equifax, and Experian Commercial. They give you trade references, which is what they're called in the business credit reporting world, or trade accounts or lines on your business credit report. And then that basically gives you the ability to establish a business credit profile and score. And then that information is then used to make it really easy for you to access business loans and other types of credit as well. So again, there's a lot of things you could do here because once you prove yourself to the business credit reporting agencies, they give you good business credit scores. You can then use those business credit scores to then start qualifying for all different kinds of credit. So what happens when you get vendor credit? Why would you do that? Well, because the next thing you get is store credit, which is where it really gets real when it comes to real estate investing. Because once you've established decent vendor credit with those 5 accounts, now you're going to qualify for store credit at most major retail stores. Okay, so you're familiar with this already, right? I mean, you built consumer credit at the beginning, you got a little bit of credit, now you're able to go into Walmart, Sears, and get, $2, $3, $4, $5, $10,000 limit credit cards. Well, the same thing works for business credit, but you can also go to places like Lowe's. You can go to Home Depot. You can also go to Labor Ready to get labor. Actually, they are beyond Home Depot and beyond Lowe's. Okay, you can go and get a lot of different store credit that you need for fix and flips. So the reason this is so popular with real estate investors is because commercial limits on credit cards are much higher than consumer. So if you have a Home Depot credit card now with a $2,000 limit or 10, you can expect to get about 10 to 50 times that with business credit. That's from experience, one, and from SBA, two. SBA says that you'll get about 10 to 100 times higher with limits with commercial credit than consumer. So what this means is, it means instead of your lousy $2,000 Home Depot credit card, with store credit in 60 days, 90 days max, you're getting 10, $20,000 limit credit cards that doesn't require a personal guarantee or a personal credit check or financials for approval. So now you can use some of these other programs I told you about to buy the real estate, and then you come in and get a $20,000, $30,000 Home Depot, a $10,000 Lowe's, and you use those commercial credit cards to buy all the supplies you need to do the actual repairs. Then you use a service even like Labor Ready to even get access to the labor you need to be able to do fix and flips if you don't already have contractors. So this is very good way to get money to invest in anything. A lot of people come to us and they say, look, I want, and we had somebody the other day that did this exact same thing. I want $250,000 loan. Well, how much do you make a year? 360. Well, you're screwed. Nobody's going to give you $250,000 when all you make is 360 in revenue. Even if your margins are 20%, that means you only profit 70-something thousand in a year, and you're asking for 250. If you dedicated every amount of profit that you have to pay back the loan, you still wouldn't have it paid back in a reasonable time. So the easier way to get money is to piece it together using all these different kind of funding programs. So you use unsecured to jumpstart your business credit, you get access to 80 grand. Now you have the money to buy your first house, but don't use that credit line to then go and get the repair, all the tools you need to be able to fix the house. Use your $30,000 Home Depot card. Now you can buy all the supplies. Now you can buy all the tools and everything you need using the Home Depot card. Still keep your credit line available with the unsecured to then maybe pay your contractors. And now you've pieced together the money that you need, trying to keep your credit line intact as much as possible. That's one of the things that store credit really helps you do. So really good use for fix and flips because you can actually get a lot of the stuff that you need. Now, sometimes when you get the vendor credit, you might need to get a credit at Quill or Uline or these type of things. But keep in mind that the reason you want to do that and use some of this credit to build your way where you need to be is because then you can get the kind of credit that you really need to get. So even if you can't qualify for that unsecured program, don't be afraid to use Uline and Quill and those kind of vendors to get a little bit of stuff you don't really need, just so you could build the initial business credit to then get the Home Depot, the Lowe's that you really want, so you can use that for the purpose of real estate investing. So that's another thing to bring up as well, because business credit also helps you then get fleet credit. Once you have about 5 vendors, you can get Home Depot, Lowe's, Amazon, Seton, Apple, Office Supply. You can get Shell, Exxon, Costco, Sears. So you can get tools at Sears. You can get stuff at Lowe's and Home Depot. And you know, you're building a business now, so you can get credit at Dell and Apple and electronics at Best Buy. You can get business credit getting a Sprint phone, the T-Mobile phone. None of this requires a guarantee, credit check, or revenue for approval. Once you have about 10 of these type of accounts accrued, then you can get fleet credit. And fleet credit basically helps you manage your vehicle or a fleet of vehicles. So now, maybe you're really getting into this and you have trucks on the road. Well, you can actually use fleet credit to get fuel for those trucks, to be able to cover maintenance, to actually be able to cover repairs. So this way you could build a fleet of vehicles to grow your business, or even just cover the expenses on yours. And again, we're back to using a lot of different ways to get money. So now we've come in and we're able to use unsecured or 401k or securities or the AR credit line I told you about to actually get the money to buy the house. We're able to use Home Depot and Lowe's and Sears to be able to buy the tools and the actual materials we need to do the rehabs. Then we're able to use fleet credit to make sure that our vehicles are fixed and maintained and repaired and fueled, so we don't have to use our credit line to do those things. So using all this money then keeps the credit lines and things intact, which helps it make it easier for you to be able to use the money you can get to grow the actual business. So then once you've done this, you want to really keep going with these trade accounts. So you want to consider all kinds of vendors you work with regularly and open up accounts, right? Office supplies, cleaning supplies, caterers, vehicle repairs. What you want to do, and what's interesting, is that a lot of people in your local neighborhood will extend credit to you if you ask and you have established business credit. So I'm from a really small town in Indiana. There's like 9,000 people in my hometown, and we have a big hardware store. I mean, that hardware store is probably one of the biggest actual stores in my town. Well, that's an example. They'll extend you credit, but they won't just tell you that. If you go to them and say, I like a line of credit, well, then what they'll often do is, a lot of these people is they'll pull your business credit report. They'll pull Dun & Bradstreet, Equifax, or Experian. When they see that you've taken these steps and that you've got some other accounts on there and you have a good score because you paid your bills on time, then a lot of the local stores in your neighborhood will actually then be able to extend you credit as well. So look, if you're even thinking about fix and flips, you've already looked into this and you know why what I'm saying is important. Because part of a fix and flip is getting the property. The rest of the fix and flip is getting the labor, the contractors, the materials, the tools, everything you need to do the actual maintenance, the actual flip of the property. So that's where a large part of the expense is. A large part of your expense in fix and flips is getting all the materials, the tools, what you need to do the actual flip itself. And with this and business credit and getting credit in your local community and Office Depot and Home Depot and Sears, that can help make all that for you. And again, when you have about 5 trades or more, you're able to do that. But with about 10 trades, then you're able to come in and get cash credit. Now, cash credit are Visa cards. They're American Express cards. I went to say Amex, but then I changed midway, so it was American Express cards. Then you can use MasterCard as well. And with these, what happens is you don't need a Social Security number supplied to get approved. You don't need a personal guarantee. You don't need a credit check. You're just basically getting approved for cash credit. But you don't need to have that good credit we talked about at the beginning. You just need 10 trades on your business credit report to actually be able to get approved. So again, once you've done this, once you have established business credit, then what happens is receiving credit ongoing becomes much easier to do. Okay, so a lot of ways that you can be able to use business credit to be able to get real estate. You could use the vendor account to get some of your initial supplies. You could use that unsecured financing program, which helps you build business credit. You can get the Home Depot, the Lowe's, the Sears store credit cards to help you. You can get trade credit in your local community at the hardware places that you're using there because you have established business credit. You can get fleet credit for vehicle maintenance or repairs, and you can get, credit at Best Buy and Apple and Dell for computers and Office Depot and Staples for office supplies, and basically everything you need to fund your business, a large part you can get with business credit, ending up with Visa cards, MasterCards, and Amex cards, which don't require a personal guarantee or a personal credit check. Now, business credit cards are another great funding source as well, because like personal credit cards, business credit cards have to be paid in a timely fashion. Now, business credit utilization should be kept, below 30% or so of utilization or available credit to keep your scores as high as possible. And of course, late and incomplete payments are going to adversely affect it. When it comes to business credit itself, accounts that actually report to DNB, Equifax, and Experian, your scores are all based on how you pay. So as long as you pay on time or early, you'll get a good score. Unlike consumer FICO scores, which deal with credit mix and how long you've had credit and inquiries, business credit real business credit doesn't look at that. It really, most importantly, looks at how you pay your bills. So you can get high limit accounts in your business name, and again, with cash credit cards, you can get them that aren't linked to your SSN and only linked to your EIN. If you don't have enough established business credit, you can get business credit cards that are actually linked to your EIN or that are linked to your social in the beginning, whichever one works easier for you. There's no cash flow or collateral requirements with these kind of accounts. You can get those immediate vendor credit approvals we talked about to get you started. You get high limit store credit cards that we talked about in about 30 to 90 days. And then you get the fleet and the cash credit in about 120 to 180 days. And again, you could skip all this, and if you have good credit, get business credit cards without any of that as well. So it's another option to go with. So business credit lines are also another great way to go and differ from credit cards because you can actually physically take cash out. Now you can borrow up to a certain limit with these and only pay interest on what you borrow. So you can draw and repay the funds as long as you don't exceed the limit, right? You're probably familiar with how credit lines work. So a business line of credit is for a lot of different purposes, whereas loans usually have a set purpose. The reason that credit lines are more friendly to real estate investors is that you don't have to specify the purpose for the line, but loans you do. If you go to get a loan, on every application, they're going to see like how much you want and what are you going to use the money for. So if you say I'm going to use it for real estate investing, that kills you with a lot of loan sources. But with credit lines, they don't ask you what you're going to use the money for because they know you're going to use it and repay it and reuse it for other purposes. So you don't have the same obstacle you have with bank, which is why business credit lines are a great option. So how can you qualify for credit lines? Well, there's a lot of different options. We talked about some already, but usually what they're looking for here is they are looking for good credit and tax returns to show a profit in some form or fashion. We actually have a new program we're trying right now where all they want to see is average credit, 650, 660, and they want to see that you have 10% to put into an escrow account till the deal funds. They just want to see that you have some kind of liquidity. It's called a 90-10 program. Now, I don't have it on here because we haven't vetted it yet. We haven't funded our first deal. Our first deal's supposed to fund tomorrow. Today's Tuesday. It's supposed to fund tomorrow. So with that program, all they want is they want some kind of liquid cash. They want 10% of whatever you're going to put up. So if you want $500,000 and you're willing to put 50 into escrow and wait 50 days and go through their funding process, they'll underwrite the deal, give you a term sheet if they like the deal, and then based on that, you know, you'll fund 50 days later. And it's basically based on you having the 10% down, which they give back to you once the deal funds. But a lot of these programs have to do with either good credit or cash flow, meaning you have tax returns to show a profit. If you have good credit or tax returns to show a profit or some kind of money to put into it like the 10% I just mentioned, that opens up a lot of different credit lines. Too many to even list in this webinar. I can immediately think of 12 right off the top of my head that you can qualify if you have a variant of those three things. Tax returns to show good profits, good personal credit, or, you know, some kind of money to vest into the deal like 10% into an escrow account. Again, this is why, you know, getting with us at creditsuite.com/get funding makes sense, because in a lot of cases it's piecing it together. It's saying, hey, look, you need experience to get house reseller. Let's use unsecured to get you the money to buy the house. Let's use business credit to get you the money to rehab the house. That'll get you past the first three. Then we flip you here. Or, hey, look, since you have this, this probably opens up 3 credit line options for you. But there's a lot of credit lines that are available if you have one of those strengths. So another is crowdfunding. Now, there's a lot of places out there you can get crowdfunding, places like Kickstarter, Indiegogo. And this is basically where you get a pool of people. You get a crowd of people to actually contribute money in so you can invest. Now, if the crowd likes your idea, they may decide to donate money to the project. And generally, crowdfunding doesn't need to be paid back. It's not even a real loan. Now, the reason I put it on here is that some cases it is. Some people, if you come in and go, look, here's the deal. I'm a real estate investor. Here's my experience. Here's my knowledge. Here's what I got backing me. It's low risk. I've got an opportunity to get in. Some people will, in crowdfunding platforms, will contribute money for a piece of the actual business or a percentage of return on what you're doing. So there's a lot of crowdfunding sites, even ones out there for real estate investing, which can work for you as well. Okay, so that being said, some other things I want to talk about too. With all types of credit and financing, remember, don't borrow obviously more than you could pay back. It seems like common sense, right? But the reason I say this is because in my world, the commercial credit world, how you pay determines your fate. If you start paying your stuff late, that one factor will tank your commercial credit scores, and then bank loans, credit lines, credit cards, everything are based on that one factor, so you'll have some serious issues. Pay back as much as you can, as quickly as you can, unless it's a loan. For credit lines, definitely so. There's cards out there like Capital One Spark, which report on your personal credit report. If you have anything that reports on your personal credit report, you need to keep the balance as low as possible. A third of your consumer credit score is based on utilization. If you overutilize personal or business credit cards that report on your personal credit report, it will crush your score. So whatever you borrow on those, pay back as quick as possible. Now listen, this is why I bring up business credit. Business credit isn't like that. Business credit, it doesn't really take into account utilization except for a couple scores do, and it's not even a big factor. So you could max out a $20,000 Home Depot, max out a $10,000 Lowe's, max out a $30,000 Sears card, and not lower your business credit scores at all. And since those accounts only report on your business credit reports, not even hurt your consumer credit scores either. But on credit lines and limits especially, where you've got to actually have them report on your consumer credit, paying them back quickly is important. And keep thinking of ways to improve and increase your available business credit, meaning don't just think what you're given is what you're given. I personally make it a habit. Every 6 months, I call every one of our consumer and business credit card providers, and I ask them all for an increase to my limit. And I ask them, I say, will you pull my credit? If they say yes, I say, I'm not interested, thank you. Because I don't need an inquiry on my credit report for a small credit bump when I could use that same inquiry to get a whole new credit card with a $30,000 limit. So I don't use it. But if they say, yeah, we do this based on your payment history and what we have on file, I say, do it. And in almost all cases, they raise my limits, sometimes considerable. It's crazy. I got an American Express card, and I called them up and said, look, you know, I got another credit card that has a much higher limit. I don't know how much I'm going to use this. They said, well, how much would you like? I basically told them, which was almost double the limit they gave me initially. They approved me instantly on the phone call. Instantly, I doubled my limit just by asking the question. Second thing I've learned here is that you've got to be in business. You've got to be 6 months with them to do this typically. Not in all cases. When I call, when I immediately get the limits and I get the card in the mail, I call them and ask them to bump my limit right off the bat. Now, I will tell you, I've seen clients do this and then they did a deeper dive and they actually canceled the card. I'm telling you, full disclosure, there's a possibility that can happen. I've seen it happen, never personally happened to me. But in those cases, I found that 30 to 40% of the time, they'll immediately increase your limit just because you asked for it, even when you just got the card. Sometimes they'll tell you you need to wait 6 months. So make it a habit. Every 6 months, go in and get your limits raised on your consumer and business credit. It helps your consumer credit scores greatly, and it gives you a lot greater use of credit on the business credit side as well. So I went through more than 15, but let's talk about grants as well, because there's a lot of government grants out there that are for the purpose of real estate as well. Now, a grant's kind of like a scholarship. It's basically free money. You do not have to pay it back. So I wanted to add these in here. So the government has a searchable database of available grants at grants.gov, not grants.com, grants.gov, and there's a whole database there that I found with a bunch of grants which actually can work for you. And search under these keywords: housing, homeless, infrastructure. It seems like homeless seems kind of like a crazy search term, but here's why you attend webinars, for these kind of hacks to figure this stuff out. But what's interesting is that there's grants out there that get you money to do fix and flips, so you can kind of be working with you know, the different sections of the housing which deal with people that that can't afford homes, or that the government's actually paying that their housing expense for them. So it might seem like it's a weird thing to search, but there's a lot of grants out there that are for that purpose, but they'll give you the money to buy and flip real estate because they're trying to solve problems like homeless or people that don't have a lot of money to put into residential real estate. So terms like house, rehabilitation, and structure get you too many unrelated results from what we found, but you could use some of those. Just know you're going to be digging through a bunch of different results. So grants often happen really quick. Many are available only for a few months. You can apply for more than one grant at a time, and you want to make sure you, as thoroughly as possible, make sure that you fill out the application, because your entire approval is based on the information on those. Now, you can also go to search for HUD grants here, and it's way too long of a URL. So I would probably take a screenshot of this so you could type it in later manually, or just go in and type in HUD grants, or go to portal.hud.gov and search for grants there. But there's a lot of HUD grants you can get as well that can work for the purpose of real estate investing. Notices of funding availability include the contact where you'll actually send the application. And if you apply for more than one HUD grant, it must be separate under application. So you've got to make sure that if you're applying for one, that you fill out a separate application. Not one application won't get you in for multiple. Now, state and local governments also have grants for housing. Offer a partnership to your state, city, or town. Ask for local government support for your project. Most municipalities want neighborhoods to be rehabbed, so property values will rise. Think about it. This is the stuff that people don't think about. Okay, and this is where you hack the system, because it's really true if you think about it. The last thing that any community wants is dilapidated properties that are there, that are, that need to be rehabbed. So if you're in there, you're actually doing a community service to fix and flip. So just by checking with your local government, you're going to find that they even have grants specifically for the purpose of you being able to come in and buy distressed property and flip it, which, let's be honest, distressed properties where some of your better margins are for fix and flips to begin with. So some other options to consider is to go to those local government affiliates. So remember, a grant requires a grant proposal. There's a lot like a business plan. A local address is usually a bonus when applying for a grant, because of course they like to keep the money local. Write a clear and concise cover letter, and you also want to check delivery requirements, mail or person, to make sure that you get them in the correct way. So a grant proposal, much like a business plan, once you've mapped one out, then you could easily use that to apply at multiple different kind of grants. You could even use those probably for HUD. You can use those as well for some of your local establishments as well. And one other thing I want to talk about here as we wrap up is you go to the local groups in your community. And I didn't add this here, and I don't know why I didn't add this here, because this is a great way to go. I mean, what I've personally found is that there are real estate groups here in the Tampa area that have to do with other people that are flipping real estate. And when you find them, then you can go into these and talk to people, and you will talk to a lot of people that lend money, and they will lend you the money. If you find a property that's worth flipping and you bring it to them, they will look at the property to make sure that the margins are there. They will give you the money, and they will want it paid back within a certain time frame, and then you're going to have to, you'll pay not a bunch of interest, a reduced interest rate, because in a lot of cases, all they care about is getting the return on the property when you flip it. And I've run into investors where they'll tell you exactly what they want. They'll say, look, I want $5 grand per flip. I want 10 grand for flip. It's not even based on a percentage. It's shocking to me how many of them are really out there, and there's a lot. Going to these local groups and talking to people, you have to be social, talk to people. What are you doing? How are you doing? Meet people. And then also, how are you getting money? And you'll run into a lot of people that are the investors, and they're going there to meet you. They want to find the person willing to put in the sweat labor to get the job done. And they're not stupid. They're not going to just give you 50 grand because you asked for 50 grand. What they're going to do is have you go out and find a property. And when you find a property and you bring it to them and say, here's my property, here's what I'm going to do, and they look at it and they say, well, this thing's worth 100 grand when it's fixed, and you could buy it for 60 now. Yeah, here's the money you need, because they see the margins are there. They're going to have a note that's recorded just like any other kind of loan to make sure they get paid back just like any other kind of lender would want to get paid back. And all they're going to say is, I want 10% of the profit. I want 20% of the profit. I want 5 grand. I want 10 grand of the profit. So the nice thing about that is you do that for the first 2, 3, 4, 5 you do. Then you go to house reseller. Then you go into some of these other programs that we talked about, which might make more sense. But it's a great way to go. I mean, it is crazy how many of these guys are out there. And that might seem even like, why would they do that? It's really simple. When you flip real estate, the hardest part is to find the right property to flip. From living in Florida, I can tell you with both hands raised, that is our problem, because there's so many foreign investors that pour money in here into real estate that it's hard to find the right properties unless you have ins with real estate agents or you're going to these groups and have ins. So these guys that want to invest in real estate but don't want to do the work, they're looking for people that are willing to do all the legwork for them, use their connections to go find the properties. And if you find the property, that's the hardest part of it. They know that. So they want to invest in the people that are hustlers that go and find the properties. And when you've done that, they'll gladly front you the money because they can clearly see the return is there and the house can be flipped. And if you've already shown that you have the ability to go out and find the right property, negotiate the deal, well, then they already know that you're, 70% of the way you need to be to being able to flip the property. In a lot of cases, those investors can even give you connections with the contractors that can sometimes do the work. And that's another reason you should go to these local groups, is in my experience, you're going to meet a lot of people with experience there that can give you access to their contractors, their people that they've used that are friendly to real estate investors price-wise, which means they don't charge too much and they get the work done and are reliable. And that's another large part of the battle with flipping, is getting the right connections of people that can actually be the contractors that do the physical work. So a lot of stuff. I want to make sure I answer any questions that you have, but we actually talked about well more than 15 ways, because we talked about a bunch of different grants and specifics, but hopefully this provides you at least 1 to 5 usable options. So let me go ahead and answer any questions you have. What is their website? Angela, let me know which one you're talking about. We talked about a bunch of different sources, and there's usually a lot of different lenders and credit issuers with all of these different sources that we actually talked about. For real estate education, it's Renatus. So Renatus is where you go for real estate education. And let me see if I can find them online real quick while I'm answering other questions. So I might be able to show you this here right on this webinar. And what about programs for refinancing in 24 months instead of 6? You're not going to find fix and flip for that, right? Because fix and flip, it's all going to be short term. Meaning, if you guys want financing for fix and flips, then you're not going to find 24-month fix and flip financing, because they don't want you to hold the property for 2 years. They want you to fix it and flip it. And people that are flipping properties are doing so at a short period of time, 6 months, not 2 years. Don't get me wrong. We talked about a lot of options. You can take all the time you want in the world to flip. But for real estate investing, they really want you to be about 24 months. And Angela, here is their site, myrenatus.com. You can see it right here, MYRENATUS.com, Renatus Education. Here is Renatus, and they really provide, they're not the cheapest, I'll be the first to tell you. The Renatus is not the cheapest out there, but they're the best. And it's the same with business credit building. Like, we give a lot of free information about business credit building. If you want to work with us, we're not cheap. I'll be the first to tell you, we're not cheap, but we're the best. We're the ones that get you the fastest results. Same thing here. And I've got a lot of friends that have paid them, and not one of them has not one of them that's taken action has not had success. They got their money back and then some. And again, I'm not an affiliate or anything like that. I'm just telling you because we actually are speakers for them, and I can tell you it's like a 6-month to a year vetting process to even get to speak with them, and their quality of speakers is bar none the best that I've ever seen. So they're really, really good on tactics and information to help you do fix and flip. So that's their actual website, because you'd asked about that. And can I see the slide right before this one so I can save it? Sure. Yep, that one is right here. If that's not the one that you want, to let me know. And I will make sure that you get what you're looking for. So hopefully, again, this helps you. If you want more options for funding, go to our YouTube channel. Or actually, go to our website, CREDITSUITE.com. And at the top right, you'll see that we do all kinds of live streams on Facebook and Periscope where we share even more. We just talked about 20 different ways to get loans with bad credit, and a lot of options we didn't even discuss here. We're talking about that right now on our live streams. You can go to our YouTube channel from there, where we have a bunch of videos that map out about the steps to build business credit, videos where we talk about just 12 credit lines you can get for your business, even if you have credit issues. So there's a lot more options. These are just ones I really thought were specific for real estate and some grants and stuff I'd never mentioned before. But if you really want more information on getting loans, getting credit, then you can definitely go there to our website to access our social media. And also go to creditsuite.com/EIN. creditsuite.com/EIN. We give you a free guide on building business credit, but then you get on my list. And when you're on my list, I'll send you regular information about business credit, how to get it, how it works, business loans, what ones are there. I notify you when new loans come out, new credit lines come out. You get updated to-date information there. And if you want to get approved, go to creditsuite.com/getfunding. As I mentioned in the beginning, we don't charge you a dime to get you loans. Not a dime. What happens is some lenders give us referral fees, some don't. But basically, you know, that we help you through the entire process, find the best strategy, get the most amount of money you can get, negotiate with the lenders, get you the best rate and terms. And it's like it doesn't cost you any money. It's like we're in your corner to have the conversation with you where you could be honest, tell us everything. And then we say, based on everything, here's where you're going to go, where that won't be questioned or where you're going to have the best success. And we help you through that process. That's our vision. As a company, our vision is to make it easy for people to get money to fund their business no matter what their situation is. So if that makes sense, always feel free to go to creditsuite.com/getfunding. I think we have an 8-question form which asks like first name, last name, email, phone, and then it just asks you a few questions about collateral, cash flow, and credit. And then based on that, we call you back and give you a pretty good idea of everything we can get you approved for. And if you have any questions or want to talk, give us a ring, 877-600-2487, info@creditsuite.com. If you email or call us, we'll always talk with you more about business credit financing, how we can help you succeed there as well. Like I said, real estate accounts for 2 of our top 3 industries: real estate agents that are building businesses and building their own credit, and then real estate investors. Those 2 account for 2 of our top 3 industries of companies we help. So we have a lot of experience helping people get in, whether you're looking to fix and flip or whether you're looking to buy and hold property, we can help you either way. So let me get to final questions here and then I'll wrap up. How do you get a DUNS number for Dun & Bradstreet? I have a whole video on our YouTube channel, youtube.com/CreditSuite, that shows you. But the easy thing to do is just go to Google and type in free DUNS number. And you'll go right to a page at dnb.com to get it. And you just go through the steps. It takes about 15 minutes to get. They will call you. They will email you. Do not return their call or their email unless you want to get sold. The whole purpose of the phone call and the actual email that they're going to send you will be just to sell you a credit builder package, which you don't really need. If you're going to build business credit, you don't want to just build it with DNB, which is what the credit builder does. You want to build it with all 3 reporting agencies. So again, if you want information on that, reach out to us. We'll talk to you. But don't get sucked in and they'll tell you you have to pay to activate your credit profile and all this crazy stuff. None of that's true. You never need to pay DNB a dime. You can get your DUNS number for free if you type in free DUNS, go to DNB's site. Just know they will call and try to upsell you. So hopefully that helps you in some which way or form. I want to invest in real estate but keep the properties. I'd like to pay my lenders off with a refinance loan or other, meaning you can. You know, there's a lot of ways you could do that, John, but what you probably want to do is you then want to really get into residential mortgages at that point. So at that point, what you probably want to do is fix the property, hold the property, and using some of these other methods, you could even get residential real estate financing, and you basically just refinance the property. Nowadays, they'll let you keep 2 to 5 properties. You can usually get financed, I think, through Fannie and Freddie. I used to own a mortgage company many, many years ago, but I'm not in that space recent enough to speak to it. But what I can tell you is if you're trying to do what you're trying to do, get a good mortgage broker. A buddy of mine is still in the mortgage industry, one of the sharpest dudes you'll ever meet. He can't help you unless you're in Florida, but he fixes and flips properties as well, and that's why he even does mortgages, so he can get the contacts he needs to get the properties to do the fix and flips. And so a good mortgage broker can help you get long-term finance on the properties, which is what you really want. Another piece of advice for you, John, just so you know, is that consider what's called biweekly payments. This is one of the least known secrets in mortgage finance. And what biweekly payments lets you do is you pay the exact same payment, but they take the money out twice a month instead of once, and you'll cut a 30-year loan term down to 23 years. It's crazy. You almost cut 25% of the loan term off and save like tremendous amount in interest just by, instead of paying $500 once a month, paying $250 every other week. And you can't just pay $250 every other week. They have to have it where they auto deduct it. But if you're going to get into residential mortgages, make sure you do biweekly payments. You'll cut your interest dramatic. More of your payment will go towards interest, and then at the exact same time, you could pay the property off a really, really, really quick doing it that way. What's the third business? Eric, I don't think I understood your question. So if you could, Eric, if you could ask me that question again, let me know what's the third business. I'm not sure what that references, but I will help you. As per the 401k, can a loan be taken out against a pension as well for financing? No, it can't be against a pension, not that I know of. And I'm never going to say anything's impossible because there's just stuff I don't know yet, and I'll look into this because I think the question's interesting. But I don't personally know of any way to borrow against a pension. And I have looked at this before and haven't been able to find an actual solution. So Eric, I didn't see another, here you are. What is the third top business that you work with? Trucking, surprisingly. Well, it's not surprising. Trucking is one of the top industries, and financing is up there too. So financing industry is one of our top clients, believe it or not. But the reason that financing is one of our top industries is because we offer a reseller program where people sell business credit and financing through us, white label. We handle all the servicing, the staffing, everything. They just are offering it as a product or service through their business. And since we're the only company out there with a reseller program in the business credit financing space, a lot of people in the financing segment are very attracted to us because just by signing up with us, they can immediately start offering business credit and loans they don't have access to. So that's a top industry. Trucking is a top industry with us for obvious reasons. We get gas and fuel cards at every single gas station. BP, Shell, Sunoco, Costco. We deal with tons of fleet credit, $10, $20, $30, $40,000 limit fleet credit cards. So for truckers that are spending $600 to put gas in their truck and then paying all this money for auto maintenance and repair, it's really expensive. And business credit is such a perfect fit for those guys because we can get them the money they need to buy the trucks, to be able to fuel the trucks, repair and maintain the trucks, which is why that's one of the top industries for us as well. But those are our top four: real estate agents, real estate investors, truckers, and financial services, which is a pretty broad spectrum from insurance agents to people that offer loans. And do you work with credit repair companies? Yeah, Wade, credit repair companies are up there too in our top 5 to 7 industries as well. We work with a lot of credit repair companies for the same reason. And actually, I consider that to be financial services because we deal with so many people with consumer credit companies. They have about 25% of their clients own businesses, and when you have a consumer that has credit issues and trying to fix it, and while you're fixing it, you're able to get them $10, $20, $30, $40,000 limit credit cards in their business name that's not linked to their social, you can obviously see the benefit. And just so you know, I came from that industry. I actually built a credit repair company, made it very successful, and sold that many years ago. And I got out of the industry and sold because I discovered business credit and I fell in love, and I couldn't think about anything else other than helping people with business credit once I found out what it was. But my credit repair company became really successful because we started offering business credit, and that permitted me to sell it and get into business credit full time. So yeah, we help a lot of credit repair companies obtain money, even cash advances, which you will be told is impossible to do. But because we do so many loans, we get those kind of exceptions to do it. And you'll also see me speak at all these kind of events. So if you go to Credit Boot Camp, if you go to all these different type of events that are out there, if you're part of Credit Repair Junkies online, the Facebook groups, you'll see our live streams in there. You'll see us speak at all these events as well. So I'll probably meet you face to face through one of these as well. So I'm going to go ahead and wrap this up. I have answered all questions that are here. I'm with Mark. Yeah, Wade, I work with Mark too. Mark's a friend of mine, a personal friend of mine. So I go into Mark's groups. So if you're part of his startup credit repair group, I go live stream in his group once a week. As a matter of fact, I was just posting in his group today as well. And Mark isn't doing a credit repair conference anytime soon. He might be doing a marketing conference sometime soon. Him and I have been talking about him doing that for about a year now. Actually, no way, excuse me. He just did one. he did an online event, and I was actually a speaker at his online event. So if you did listen to his online event, you probably heard me speak about business credit 2 or 3 times there. He's also thinking about doing a live marketing conference, and if he does, then I always support him because he's a friend, so you'll see me there too. So I think I'll probably see you around. So thank you all very much. Again, CreditSuite.com, top right of our page, all kinds of social media links for you to get even more information. CreditSuite.com/EIN. Get a free guide on building business credit. Get in on our list too, so I'll keep you apprised of what's going on with changes. CreditSuite.com/getfunding, just to talk to our finance team and learn a little bit more about all the financing you can get approved for now. Thanks everybody very much. I'm going to wrap this up. I hope you all have an excellent day. I look forward to seeing you in the weeks to come. I'll be doing another live webinar in about 2 weeks, and then I'm going to start going live on YouTube on the off weeks. So every week I'll either be doing a webinar or a YouTube live, and on top of that I go live on Facebook and Periscope every week where we can have live interaction and answer questions as well. Thanks everybody very much. Hope you have a great day.